Bull flag still intact on ICP. We're still tracking it down. It's kissed the 20 moving average. As we said, it's hit our support, and this is what I'm looking for next. And we've had a bit of a nasty pullback within the crypto market over the last couple of days. So anyone that's new to crypto and you've seen your coins drop 20%, that's nothing in comparison to how bad it can get. Crypto's a roller coaster ride, and that's the importance of these magical lines, these magical patterns on the charts that I keep talking about. So why is it important to look at these patterns? Why is it important to know when we're right and know when we're wrong? Because preservation of capital is much more important than making these gains, because without the preservation of capital, without the capital in the first place, you can never make those gains. Blow your account and you end up with nothing. So, right, okay, this bull flag, we've been tracking the bull flag. We said we were likely to get a kiss at the 20-day moving average. We said that was likely to hold as support. So this has held as support. That's a tick. When do we know when we're right and when do we know when we're wrong? How can we give ourselves additional confirmation? I want to show you volume. So you can click on indicators and then you can just click on volume. If you've got your trading view charts up, click on volume. And what this is going to do, it's going to give you an additional bias. Once you've got a break, you need a little bit of confirmation behind that. You need to know that the bulls, in this instance, you need to know that the bulls are with you. And how do you know if the bulls are with you? These volume spikes here. So look, just an example, you've got a break of this long trend. You've got a break of the 200 moving average. To be able to break those two areas of resistance, you need a huge spike in volume. You need the bulls to have full momentum. And look what happened here. You've got this big, huge volume spike, which followed by this green candle. You could do it time and time again. You've got this break here, and you've got this big green candle here. What's that backed up by? Volume. You can tell it's true if it's backed up by volume. So what we want to see is we want to see this pullback. We want to see a break. And we want to see a spike in volume on ICP to give us additional confirmation that the bulls are with us. We want to swim with the bulls. We want to flow with the money. Okay, so next level boss, sitting at $14.42, $15.62 at the top. So this bull here, to hold his support zone, we need to know one thing. That one thing that we need to know is, are we going to put in a new lower low? Once we put in a new lower low and price actions close below the previous low, the trend is likely to reverse. So I'm going to show you another tip, another way that you can tell when you're right, when you're wrong, and how you can prepare. So what we're going to do is we're going to take this, we're going to take our square to the previous swing high, follow that down to the previous swing low. And what we're going to do is we're going to create an area of interest. How does this area of interest help us identify when we're right and identify when we're wrong? Because we know that this is the low that we need to take out. That's the low that we need to take out. If we've taken out this low, price action goes like this. What does that mean? The trend's reversed. We're wrong. We need to prepare that we're wrong. We need to apply appropriate stop losses, and you need to prepare to take advantage of lower levels. So this is the power. This is why we need the break. We need to know that momentum's with us, because if you're trying to take it here, bam. Try to take it here, bam. Need this break. You need this break. This is the confirmation you need. You need that with volume. You can take advantage of that, and that's going to give you additional edge. It's going to give you additional bias. Make sure you prepare yourself, and I'll see you in the next video.